Good morning, it's Monday the 8th of November and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights to keep an eye out for. As always, we'll give you a quick summary of the macro data points from around the world to expect over the week, and we'll then take a look in more detail at some of the bigger stories straight afterwards. So, stay tuned. So, let's take a look at the economic numbers being issued this week. And starting today, we'll hear the speech from Jerome Powell at the US Fed. On Tuesday, we'll hear the latest German ZEW economic sentiment, the latest PPI figures over in the US, and the latest Australian consumer confidence numbers. On Wednesday, we'll hear the inflation figures from both China and Germany, and we'll also hear the latest consumer price index numbers over in the US, and we'll be talking more about those in a moment. And finally, the EIA crude inventories. On Thursday, we'll hear the latest Australian unemployment statistics, the ECB macroeconomic projections, and in the UK, the latest industrial production numbers, and also the update on the country's GDP figures, which we'll again talk about more in detail shortly. And on Friday, the Eurozone industrial production numbers, the US Michigan confidence figures, the latest job openings and labour turnover survey figures, and the companies that we'll hear updates from this week are as follows. On Monday, we'll hear from Sirius Real Estate. On Tuesday, AB Foods and the house builder Persimmon, and we'll talk about both of these two in detail in a moment. And the property company Land Securities, Direct Line and Watches of Switzerland. And on Wednesday, the company that underclothed half the nation, Marks & Spencer's, and we'll be talking more about them in a moment. Aveva, Halfords, ITV and in the US Disney. And we'll also take a look at them shortly as they release their latest Q4 earnings. On Thursday, we'll hear from Burberry, Aviva, Taylor Wimpey, B&M European Value Retail, Ted Baker and WH Smith's. And finally on Friday, the name that's been on most people's lips for the last year and a half, ASTRA as they release their Q3 numbers. And again, we'll talk more about them afterwards. So after several busy weeks from a central bank perspective, events are set to quieten down a bit this week. Investors are likely to continue digesting the ton of information received after the Fed started tapering and the BOE unexpectedly kept rates on hold. COVID cases are also on the rise in the Northern Hemisphere as the temperature drops and earnings season is still in full swing, giving investors plenty to focus on, even as the macroeconomic calendar is slightly slower. So let's take a look at some of this week's key stories in detail. Now, on Monday, the electric vehicle maker RIVIAN, backed by Amazon, is due to go public this week. Now, RIVIAN significantly raised the expected offer price for its shares, aiming for a valuation of $65 billion, up from $53 billion, at a price of $62 per share. The company expects to sell 135 million shares in the range of $72 to $74 to raise $10 billion. The raised target price comes after a successful investors' roadshow this week for the firm that's set to become the next big player in a sector dominated by Tesla. RIVIAN hasn't a revenue stream yet, but it has taken many $1,000 refundable deposits for pre-orders. In the latest Q3, the firm said that it expects a loss of $1.28 billion and doesn't expect to be profitable anytime soon. Primark owner AB Foods is due to release earnings on Tuesday, and expectations are high. Despite the lack of an online offering, the brand is expected to show some strong numbers as crowds of loyal shoppers return to the stores after they opened following lockdown. Stock management is a key strength at Primark, meaning that they've avoided excess discounting, which has plagued other retailers. The grocery division is expected to see sales growth slow compared to the pandemic, when stockpiling was commonplace. Supply chain issues are likely to have caused some headaches along the way, though. So, the last we heard from Persimmon, the house builder, reported H1 revenues of £1.84 billion, up firmly from £1.19 billion. H1 profits after tax rose £391.2 million, putting the firm well on track to surpass last year's profits. Completions were as expected at 7,406, and prices rose 4.9% to 236,000. And that helped to offset rising costs. And despite the winding down of the stamp duty tax break, management remain upbeat about the long-term outlook for the housing market. Despite the upbeat results, the share price has been steadily declining since June after approaching its all-time high. This is most likely due to rising expectations of a rate hike from the Bank of England, which could pour cold water on the booming housing market. Marks & Spencer has had a tough few years along with several failed turnaround plans. However, the pandemic has forced management to take a more serious look at the business, and finally there could well be a glimmer of light at the end of that tunnel. After a strong start to the year and a profit upgrade, hopes are high that H1 numbers released on Wednesday will also be encouraging. The Ocado partnership appears to be reaping benefits. However, the clothing business has been the weak link, although there are green shoots of optimism here now as well. In Q1, revenue from clothing and home was down just 2.6% on pre-pandemic levels of 2019. Annual pre-tax profits are expected to be £300 to £350 million. The share price trades around 1,954 pence, and that's a 19-month high. Also on Wednesday, Disney is due to report Q4 earnings, and the streaming service is expected to take centre stage. Management had set a long-term target of 200 million subscribers, and concerns are rising that this figure could be lowered, particularly following a warning from CEO Bob Chapek in September. In the warning, investors were told to expect new subscriber numbers in the low single-digit millions, which would mark the lowest and slowest launch since the service began. Slow content production due to Delta COVID plus a lackluster launch in South America have been blamed. Whilst the streaming service will be the main focus, investors will still be keen to see how the recovery in the theme parks business is progressing after the big reopening. Analysts are expecting Disney to report earnings per share of 44 cents on revenue of $16.3 billion. US consumer price inflation appears to have stabilised at around 5.4% over the past few months, a level which is over double the Fed's 2% target. Core CPI reached 4.5% in June and has since stabilised around 4%. The Fed has been firm in its message that high inflation is transitory and has started to rein in its support to the economy by slowing those bond purchases. The Fed has continued to push back against a rate rise sooner rather than later. US CPI is expected to jump to 5.8% in October, well above the 5.6% seen in 2008. Core CPI is expected to be 4.3%. Stronger than forecast numbers could lift the US dollar, sparking bets that the Fed will hike those rates sooner. This could also pull stocks lower, particularly high-growth tech stocks. So as a result, keep a watch on the US dollar and of course US indices. On Thursday, we'll hear the latest UK GDP figures. The UK economy grew 5.5% in the second quarter of 2021 as the economy ramped up as COVID restrictions eased and thanks to a boost in staycations. The latest monthly GDP revealed that the UK economy grew 0.4% in August. The Bank of England have forecast that economic growth was slow in the third quarter as supply chain issues and chip shortages started to weigh on growth, particularly of car manufacturers. Although back-to-school spending and staycations would have acted as a bit of a boost. In the November projections, the Bank of England said that it expects GDP to grow by around 1.5% and 1% in the final quarter of the year. This would mean that GDP would remain below its pre-COVID level until Q1 2022. And finally, on Friday, the drug maker AstraZeneca will release their Q3 numbers, and expectations are high as the share price trades at all-time highs. The company reported revenues of $8.22 billion, that's up 25% in Q2, boosted by vaccine sales of $894 million. and also raised guidance reflecting the deal to buy Alexion, which completed in July. Consensus expectations are for sales to grow by 33% and pre-tax profits by more than 130%, thanks in part to that Alexion deal, which will strengthen its position in the field of immunology and rare diseases, and as the firm can start to raise prices on its Oxford COVID vaccine going forwards. So to wrap up, let's take a look at the dividends for this week. In the FTSE 100, we'll hear from the oil majors Royal Dutch Shell A&B, BP and the supermarket Sainsbury. In the FTSE 250, Softcat, ICG Enterprise Trust, Greencoat UK Wind, Fidelity Emerging Markets, Airtel Africa and Renewables Infrastructure Group. So that's what's coming up this week. Don't forget to click on that subscribe button just to make sure you don't miss our regular market updates and our special market analysis videos as soon as they're released. And of course, if you're interested in the markets, don't forget to check out our app. It's very clever stuff, which you can download from the App Store to your mobile phone, which gives you a whole host of useful functionality as an investor. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.